Start the recorder. Welcome everybody. This is the Thursday evening Viper trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you're absolutely in the right place. First, we got to knock our standard disclaimer out of the way, so let's take care of that. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Hey, Walter. Welcome, Walter. Rob, good to see you. A lot of folks still coming in. Welcome. We're just getting ready to kick things off here. Jay says he enjoyed the trade calls today. Well, I know my style is a little bit different than Gary's. My apologies. I didn't mean to take over all four charts, but I knew Gary was having a little bit of technical problems over there, and so while he was trying to sort that out, I tried to carry the ball on all four. So Walter says he's going to send me over to the Canucks hockey team for a play-by-play announcer. Yeah, it's a little bit different style than Gary's. My apologies. I hadn't done that in a long time, so it was kind of a trip down memory lane a little bit. Anyway, okay, so let's get over to some charts. We're going to start off tonight with, oh, by the way, the topic tonight is identified swings and how to use them in your trading. This is part one of part two series. And let's get over to the second part will be Saturday morning at 9 o'clock Pacific. Before I jump into some trades, there's some housekeeping we need to do very quickly. For those of you who do trade futures, I know we have a lot of visitors visiting us this week, a lot of free trialers this week. So there's some things you need to be aware of. Just like the options markets, the futures markets have expiration dates, and they roll over. Just if you've traded options or other instruments with expiration dates, you can see here that the first collection of instruments is the currency futures. That's your six E's, euro, Canadian dollar, British pound, etc. here. Crude oil rolls in a different month, so you need to watch if you trade crude when that date doesn't sync up with some of the other instruments. DX, of course, if you trade currency futures, that's the dollar index futures. That's going to all roll. You can roll it tonight and start trading June in the morning, or you can roll tomorrow morning. But you have to remember by Monday, if you're going to trade live capital out of your trading account using these futures instruments right here, you've got to go in and change them to the June expiration. Does everybody know how to do that? Does anybody not know how to roll these contracts in Ninja? I can take a second to show you if you don't know. What the heck, I'll show it. It's really simple. Yeah. We're not going to be trading. We're not going to be trading in the room tonight, Carl. We're going to be covering swings and trade setups here. Let me show you something real quick. This is how you roll the contracts. You go into your instrument manager. This is your control center for Ninja, right? You can do this even if you're in sim or live, either way. All right. Go into instrument manager. Okay, here's where you get all your instruments. Now you don't have to put all these in here. I put them all in there because I trade different instruments sometimes throughout the course of the day, and I have to do the high energy or the high percent trades, high probability trades that come out every night. So I have to go through each instrument and take a look at it. But see, when you click on here, what's going to happen? It hasn't changed over to the next. When you click on this, it will show the current front month. See how it's still showing March? Okay, now tomorrow when you click on that, I would bet at least $1 with you that they'll all show June. Okay, they'll show June as the front month. So what you do then is just click on this. I'll do one here. I'll just do it real quick. Put 6A over there, or whatever, ES, EMD, whatever you trade, NASDAQ, and then take the old one and take it off. It's that simple. Swap them all out. Now, once you do that, yeah, they roll, I think tomorrow, Ralph. I'm going to double check that. Now, another place you can go, does everybody see how to do that when you roll it? Now, after you do it on your instrument manager, go back and do all your charts. so that you're in sync with the markets. So you're not trading 1 month, March, when you really should be trading June. Now, another place you can go if you're ever wondering what the current front month is cmegroup.com. Does everybody know, is aware of that site? Let me show it real quick here. This is the Future CME Group website. The homepage looks like this. This is a good resource. I would strongly urge you to bookmark it, because you can come back here as often as you want. Right here. And then you scroll down, and then about in the middle of the page here, you're going to see the front months on all these contracts. Okay, front months on all the contracts here. I'll see some of them have rolled. FX. Yeah, see a lot of these have rolled. No, it hasn't rolled yet. It's going to roll probably tomorrow. So just check with your broker, check with here, and check on your instrument manager, and make sure you're always running the current front month. Okay, bookmark this page, CME Group. It's a good site. Always has good information on the futures. Okay, so back to the charts. Now, for those of you that are new and visiting and free trialing, just a quick refresher for everyone here. What you're looking at is a YM chart. This is the mini Dow. It's $5 a tick. The instruments we trade in the room, as you know, are YM and NASDAQ. Those are the ones I primarily call and trade in the live trading room. Both of them are $5 per tick. That means that each tick of movement equals $5. Okay? A point for NASDAQ is 4 ticks. So that means that each point on the chart, each 1 point, would be $20. Whereas YM, it's just $5 a tick. So each one of these increments here between, say, 70 and 80, this would be $50. 10 times 5, right? Now on the charts here, of course, you see that there's background colors. There's bar colors, red, yellow, and blue. And there's transitional colors on the backgrounds as well. This sort of grayish shaded area right here. Let me just sort of swing back a little bit. And of course, you can't miss the obvious bands here. The middle band, the large band, obviously is called the mid band, and we have 1, 2, 3, 4 above it, 1, 2, 3, 4 below it. Those are the outer bands, above and below the mid band, excuse me. And they can play a good role in identifying support and resistance as well. Excuse me, we'll look at that in a few minutes. Generally speaking, and this isn't always true, but as a general rule, when a market is heading down in a downtrend, you will, for the most part, see a red background. You'll see red bars. And the characteristics, of course, is going to be that your mid-band and all the bands around it will be stair-stepping down. That's considered a downtrend. Now, pop quiz to make sure everybody's still awake here tonight, okay? I'm gonna cover a lot of information pretty quickly, so I'm gonna pop a couple of quizzes up in there. When looking to enter a short trade, and I'll make the first couple questions pretty easy, and then I'll make them harder throughout the course of the evening. When looking to enter a short trade in a downtrend, I'll give you two choices, A and B. Should you short the thrust move when the move starts to break down, like such, to get in as your entry? Or do you short retracements, where markets come back up to resistance areas? This would be B. A, you short the thrust. B, you short resistance. In a downtrend, we're shorting the market. I'm going to give you 5 seconds. You should instantly know this. Everybody here, and if you don't know it, we're going to make sure that you learn this so it's ingrained in your subconscious and you just immediately know what to do when you take trades in these markets. And equally important, and this is going to be something that as you spend more time with us in the live trading room, when you hear trade calls like, okay, if the market comes back up anywhere near that 98 area and rolls over, I'm taking a short. So what that means is, yes, it's B. I see everybody in here got that tonight. So the way this works is when you're trading any type of trend, we do not short thrust moves. Now, if you're getting stopped out a lot in your trades, That might be what's happening to you. And here's how this can happen. Okay. All right. Here's how this can happen. Okay. It comes down. You get a little bounce off the mid-band. You know, the trend primarily was up, more or less through here. So you can see as the market thrusts up, it pulls back, finds support. This is your trade entry right here. It bounces, heads up, pulls back, hits support, your trade entry there, up. You get the idea, right? Now in here, you get one last sort of bounce. Now, the important thing to note here, and you hear this observed in the room all the time by both Gary and I, is that when a market starts to exhaust itself in a given trend direction, you will find that the subsequent thrusts usually either come right to the current swing or don't quite get there. This is an early clue. Now, this in and of itself does not constitute a trend change, just to be clear about this. This is not saying the trend has changed. What it's saying is that the momentum is starting to wane on the move. And then, in other words, there is not sufficient buying thrust from the buyers to push it at least back up to here. And that's an early clue. Whenever you see that, that's a clue to say, well, something might be changing here in this trend, right? Now, notice what happens here. I'm going to take this arrow off of here so we can all look at it together. And here's what, if you experience this, what I'm about to show, I totally can relate to what you're feeling. All right, now watch what happens. We come down through the swing. We break it just a little bit. Now, the interesting thing to note here, I'm going to blow this up on the right-hand side so it's really super clear. This is a characteristic of a lot of swings, and we'll get into the swing topic in a second too. I just want to show a couple things here. Notice that this support level under the mid-band was broken by just a few ticks. Now, that in and of itself is not necessarily noteworthy, although in addition to the fact that you couldn't get back up to the highs here, now by this point you definitely should be wondering what the heck is going on with this upward move, right? Now, note what happens here. You come up to just above the mid-band, and what happens? What happens right here at that swing level right there? What happens? Does it continue up into here? It rolls over. It rolls over. Yeah, Peter, you know, it really depends on the strength of the move and different times of the day. I mean, sometimes you could see 2, 3, 4 retraces in a good trend move. That's very common. Once you get beyond 4, you're probably going to see some profit taking. It's going to be deeper retraces and possibly trend changes. So you just have to really look at the instrument you're looking at. And what I want to say here is that by the time you get to here, you could almost draw a downtrend line over the highs, because now you're getting a series of 1, 2, 3 lower highs, right? Transitional background starts to show up. Bars are red. They start to stair step down. Now let's just play this out. Okay, it drops very precipitously, comes into a support area down here around the 75 area. Now, as this market is dropping, here's what might be going through your head, and I can understand that. Maybe you made note of the fact that it was the lower high. Maybe you made note of the fact that it broke here. Maybe you made a special note about it came up to here and rolled, and you're starting to watch it bar by bar take out support. See it? Bar by bar, it's dropping, right? Dropping, dropping, dropping. All right, you're starting to be convinced. You're starting to get convinced that there's a trend change afoot and you want to get in because you're afraid you're going to miss it. So when it gets down here, right down into that 75, 79 area, you decide to pull the trigger and hit market short and get in right down here, because now you're convinced. You're absolutely convinced that the market's heading down, and if you don't get in right away, what's going to happen? You're going to miss the next big move, right? It's going to be 100 ticks and you're going to miss it. Trade of the day is coming along. So you decide to jump in right here. How many people am I in here describing? Has anybody experienced this feeling? When the market starts running away from you a little bit, you feel compelled to pull the trigger and get in. And you always seem to get in, you know, right here, right down in there after part of the big chunk of the moves being made. I know that's got to be some of you. OJ Oklo says, that is me to the T. Richard C. Oh, good for you, Richard C. He says, that was me 2 months ago, but I've changed. Richard C., I noticed you making money almost every day. That was a huge change for you, wasn't it? Yeah, I know it was. It's made a huge difference in your trading, hasn't it? Ray says, no, I don't do that. Dave saying it's a herd mentality. Ralph says, I used to do this before I learned the Viper way. Minaj, that used to happen to me before. I'm trying to change now. Okay, good. All right, good. So here's the thing you got to do. When markets are in that thrusting part of a move, and you're not already in it from higher levels, in the case of the short, or in the case of the longs, you're not, when a market's thrusting up or thrusting down, you have to really, really sit on your hands and force yourself to wait for a retracement. Those of you that trade with Viper, you know this. Those of you that are visiting, we are retracement traders. We do not chase thrust moves. Because here's what happens. When you go ahead and pull the trigger, and you might get filled short somewhere down here on a market entry, hypothetically. Okay? So you're short down here, and you're thinking, man, this thing's going to tank. It's going to go. It's going to keep going. I'm going to make a ton of dough on this trade. Wee-hoo! Now look what starts to happen here. Market starts to bottom. Starts to find a little bottom at 75. So you're watching your P&L. Your P&L is going up and down a little bit, right? Up and down a little bit, depending on your contracts. You're up a little bit, you're down a little bit. Now look what happens. Bars are coming up. Now this is called feeling the heat, right? Most of you know what I'm talking about if you trade live money, right? You're feeling the heat. Feeling the heat means you got in, not such, all due respect, not such a good area. This is the apex of the sell-off here, and you're filled down here, and the market's pulling against you. And you're starting to feel sweaty, and you're starting to draw down money, right? Comes up. Now, just when it gets right up here to the mid-band, and in this candle forms, guess what? This is where your stop is. You had a protective stop sitting up here because you just, and you say to yourself, no mas. I can't take any more of this. I'm down, almost 20 ticks. I got to get out. I'm getting out, and you stop out right up there for a loss. Okay? See it? Did that happen to you, anybody? I know some of you are experiencing this. I know you are. All right. Now, the seasoned trader who trades retracements and is patient, waiting for that retracement to come to them, is actually getting in right here, where the trader who pulled the trigger down here is getting out. That's why so many traders lose money, is they always tend to pull this trigger in the wrong spot, and then they get stopped out, only to find out that the market then comes up and rolls over right where they got out, and then continues on down for a very nice trade. Okay? So if you're kind of stuck in this mode right here, you really have to force yourself to learn to sit on your hands. And of course, we'll help you in the live trading room. That's what we do. We're in this trading. We're trading this with you. We're trading live money against the instruments, just like you guys are, guys and gals, everybody in here. And so when we say things like, okay, it's come down, it's thrust down into a swing level here, it's holding support at 75, I'm looking for a rollover up near the mid-band around 94, 98 area. If it comes up in there and rolls, I'm looking to take a short, because in fact, what that is the retracement you're looking for to enter the trade. That, in a nutshell, if you want, there's a lot of folks that trade with us. I mean, we have a whole 50, 60-page manual that has detailed all manner of trades. Also, you could almost any trade you could really name. I mean, we cover them all sorts of different trades. But here's the thing I say in regards to your personal trading style, and when I say you, I'm referring to everybody in here tonight, is that you have to take all the tools and the teaching that we do with the different, we got the object trader, we've got the lines, we got ray tools, we got all manner of tools to enter. So you got plenty of equipment to do your job, right? But you got to see it ahead of time, and you got to know what you're doing in order to enter these trades. Now, you could box this in up here, OJ. I'm not going to get too much into trade entries tonight. simply because I'd like to stay focused on seeing the trades ahead of time. And then Gary has done quite a few videos on how to use all the tools. So if you really want to bone up on the tools and how to use those to get in and out, by all means, you can watch those. And we're going to post some more videos tomorrow. For those of you that are visiting, we're going to get them up on our YouTube channel. We'll put them on our website. We'll get, in the next 2 weeks, we'll put a ton of webinars and video content up for everybody to watch, okay? And we'll send you links for all of it. But anyway, that's in a nutshell. And I guess what I'm saying is that we have a lot of traders that trade with us that this is the one perfect trade they like to take. They love a retracement trade, and they like it to come somewhere in and around the mid-band. That's a mid-band retracement trade. Now, it doesn't have to hit the mid-band perfectly. It can come anywhere sort of either side of it. But the point is that it finds that resistance level and then rolls over. Now, if those of you who have traded, I'm going to diverge from this for 1 second. I'm going to pull another instrument up. Give me 1 second, please. All right. Let me pull NASDAQ up. Those of you that watch and trade NASDAQ, you know what I'm talking about. That's one funky little instrument that sometimes does not behave itself very well. Right? Those of you know what I'm talking about, right? For me personally, you know, Dave is asking about the entry at the mid-band. Do you fade the mid-band? Let's take this over. That's a good jumping point to get into our swing topic. If there's no more questions on this, I'm going to move on. I'm going to clean this chart, and we're going to look now at swings. I just want to kind of whip that in there real quick. It's just a really sort of a textbook, one of our sort of go-to bread and butter, whatever you call meat and potato trade that everybody likes to take. Now, in regards to swings, I'm going to do some swings on charts together where we look together at the charts. And then we're going to start doing some swings where we're going to look at it, and I'm going to have everybody in here collectively call out where you see swings and how significant they are or aren't. Let's go back over here and start and work our way backwards real quick. Now, when we say identified swing, what does that mean? Ralph's saying if you miss the first pullback at the mid-band, how safe is the 10 or on the secondary? Well, back to the other question here, and that's related to Dave's question too about the entry at the mid-band. I personally like to see some evidence that the market is rolling over. I'm a little less aggressive than some other traders in this area. Some traders will go ahead and just short the mid-band, right? I like to see a rollover. I like to see the bars come up. See right here, for instance? See how these bars, just an example right here. See how they start to consolidate, they come up, and then they roll and break? I like that. For me personally, that's what I like. That's the type of entry I like. I don't necessarily like when it comes down and it wicks an area and then bounces real quick. You know, you got to be pretty quick to get in those. Try to box it in or use your line tools or use a sniper tool. So what is a swing? Somebody says there's an identified swing. Somebody says there's an identified swing. What does that mean? I don't know what that means. What does that mean? Identified swing. We talk about it all the time. You hear it in the live trading room. Swing. What is a swing? What is a swing level? What is that supposed to mean? What are swing levels? What does it mean identified? What is that supposed to mean? What, you checked its ID? You know, you said, hey, can I see your driver's license? Are you an identified swing? What does it mean? Does it mean anything to anybody? What does that mean? We're going to have a whole webinar where we're talking 2 webinars on it. Gary's done several as well. End of a thrust, says Carl. Close above or below maximum point. Yeah, swing levels are just are levels where a move has come to and exhausted itself, and it tends to pull back from there or pull up from it. Okay, hold on 1 second, please. Stand by. Okay, sorry about that. Let me get back to the chart here. So let's talk about this in the context of what you see here. And this is very, very easy to do, and I suggest everybody put lines on your charts just like Gary does and we discuss in the live trading room, because it's going to make a huge world of difference in your trading. It's going to help you see so many things that if you're not doing lines on your charts, you're probably missing it right now. So it makes a world of difference. It really does. Let's look at a couple swing levels, and I'm just gonna put some lines on here. You're gonna see how easy this is to do. Excuse me. Hold on one second. Got this little tickle in my throat. I'm fighting with this. Got some iced tea here. Let me back up before I do this. And this is a helpful way to see this. And by the way, you can put Show Predictor on here, and it will show you a lot of them. But I'm gonna pretend we don't have that tool right now. Okay. See how that shows the swings? So I guess what I'm saying is you don't technically have to become an expert in swings, because we have a tool that shows it pretty nicely. See them? All right, but let's pretend we don't have that. Let's suspend disbelief. Let's say we don't have that. Now, when a market comes up to an area and it finds support or resistance, it may hit it once, it may hit it twice, it might hit it 3 times or more. The number of times that a level is checked by a swing is where something comes up or down and then reverses. Comes up and reverses. That establishes what's called a swing level. Comes down, reverses. Comes up, reverses. And they're characteristic by a spike or a point. Here's one right here. It came down, reversed. Right? Up, pulls back. As these little swing levels occur, and you're not using predictor, which will show the swings in the little bubbles with the swing levels, you can simply take lines and you can put them where the support and resistance levels are. Sometimes they'll correspond. We used to use pivots. Anybody still using pivots out there, by the way? Anybody use any kind of pivots? Daily pivots? Murray Math pivots? There's all sort of different scripts of pivots out there. Anybody trade pivots? Sometimes the swings go around the pivots. Sometimes they don't. You know, it's kind of hit and miss in that area. But sometimes they can act like little magnets, if you will, for the price. Here's a good example right here where we see that this was a prior swing area. If we had noticed that on our chart, we could have put a line here. And then when the market thrust up through this level, like such, where might we have expected a pullback to find support? Look at that. What happened right here? Now that turned out to be a pretty darn good trade, didn't it? And it would have been pretty helpful. I mean, the mid-band was there. That helped. Obviously, the mid-band was right there. We were probably looking for a little bounce there anyway. But it reinforces the fact that you had hit this level 3 times before, and it was resistance that turned out that you have huge pullbacks from it. So what happens is the theory behind swings in support and resistance is that support becomes resistance and vice versa. It's kind of like going in a multi-story building from floor 1 to 2 to 3 to 4. So think of it that way. When you go up through the ceiling of one floor to the next floor, as you did here, when it pulls back, when you go up to the ceiling of the next level and you pull back, what should be underneath your feet? That's a good way to think of it, right? You're ascending or descending a building, right? Think of the ceiling as the resistance level and the floor as the support level. And so when you see price action, you can make note of the fact that you're going from more or less floor to ceiling. Now, it doesn't always work perfectly. Sometimes it's close, sometimes it's off a little bit. Let's look at a couple other areas. How about a little swing right in here? See that? You got another swing that occurred up in here. You can, after the swing occurs, you can pretty much go right in there and put your line right in here, okay? Now, notice in here, after this thrust up in this uptrend, we went all the way up to this swing off of this beautiful retracement entry right here. Let me put a box around it. This was just textbook long entry on that retracement. This was 11:30 today in YM. Textbook mid-band entry right off that support level. We come up, get a swing, back up. We get a beautiful thrust. This turned out to be a perfect trade right here. Now, when this is pulling back, we might expect it should get somewhere close to this swing level right here. Comes back, pulls all the way back, holds a little bit higher level right here at the outermost band, starts to bounce a little bit. Now, when it comes back up through the mid band, I'm going to ask a question, make sure everybody's still awake. When this thing bounced off of here and started heading back up, where might the price go when you see this? You had consolidation in the outermost band. We come up, we start to bounce. We come up through the midband. Where might this market go if it continues up through this midband? Where might this market go? Anybody? I'll give you 10 seconds. Where might it go? Just type in a number or a comment. I'll give you 9 seconds. It should be pretty clear and evident on the chart where the market might go. Yeah. Okay. Good. Richard C. Back up to the next swing. Perfect. 970. Good, Chris. Yeah. Up 970 area. Good. Minaj, Ray, OJ, Sedley, Dave H. Good. Well, I mean, either you bought this support or you were short and you covered down here. It comes up to the mid-band. Perhaps you boxed it, used your tools, depending on the time of day, or about an hour. You just right before the close. This is another time to trade, by the way. If you, stupid box. Hold on 1 second, please. This thing is giving me fits. I would say between 11 and into the close, the last hour and a half, 2 hours of trading. That would be 11 o'clock to 1:30 Pacific time. 1 o'clock. Sometimes you get to, don't allow yourself to get chopped up in some chop. But if the market's moving, you can find some nice trades in there. For instance, if you missed the early morning session, you didn't hit your goal for the day, you're back early from, friends or family, your part-time job or whatever you're doing, playing golf, and you want to start looking for some trades, that's another time to do it because you get some movement in the markets here. You can see that after 11 o'clock, 10:30, 11 o'clock is when these nice moves start to set up here. Sure enough, what does it do? Comes up right through that swing, right there. All right, now I'm going to go ahead and try to move this swing somewhere. If I was to move this swing from where it was sitting over here, and I was going to put it somewhere else, where might this swing go? Where would be another swing to put on this chart that's not on there yet? Where might we put this swing that's not on the chart? Looking for a level here, 10 seconds. Looking for a level. Where do you see another support or resistance area that does not have a line swing identifying it right now? Where would you put it? 9 seconds left. You got to be able to see these quickly. That's what we try to do. We try to do with these little drills is we try to have all this sort of ingrained in your subconscious so when you see it in real time, you don't have to sit and think about it. You don't have to give it a lot of thought. It just comes right out because it's ingrained in your subconscious. I see some numbers. Okay, 4 seconds left. Where are you going to put put a line here for a swing that's doesn't have a line on it just yet? 3 seconds. Where are you going to put that line? Got one here. We had one here, and we got one up here. We see all those. Yeah, good. Time's up. All right, good. Now, if you said anywhere right around this 926, 930 area right in here, you're right. Perfect. See it? Everybody see it? So question, just a quick comment from the team. Why do we put the line there? Why would we put a line there? In fact, at the time this was happening, you could make the case that you had a nice little consolidation patch that held pretty well right in here, didn't it? I mean, it spent some time sitting here. It went down there almost at noon and didn't get out of there till 15 minutes sitting down in here. Good. It was a support area. the support held, the continuation pattern, ABC, pull down, held it. If it comes down there, that area might hold on a pullback. Good, good. Support becomes resistance. That's not always perfectly true, but many days, almost every day, on almost every chart, any kind of market, doesn't really matter. You're gonna get support turning into resistance or close to it. All right, so now that we've thrust up through this next swing and we're continuing our uptrend move, and I don't know if some of you use uptrend lines. You can use a ray to draw an uptrend line if you wanted to. It would look something like this, right? Now, if we get a retrace off of this fresh swing high here, where might the market come back to? And if it came down into this area, what will we do with it? That's a two-part question, so I'll give you 15 seconds. Where might the market pull back to off of that fresh swing if we get a retracement? I'm talking about this swing right here, right edge of the chart right here. If it retraces, where might it come to? If and when it was to get there, you can just type in a number or numbers. What are you going to do? That's an obvious question, which is the answer is going to be either buy, sell, or nothing. So two-part question, 14 seconds left. Where might the market come to? So this exercise is using our knowledge of support and resistance. It's incorporating the fact that we're trying to observe that there's an uptrend here, afoot, yes? And it's employing the fact that we are retracement traders. We're not thrust traders. We buy into retracements or sell into retracements. 12 seconds left. Which requires us to do something that most traders don't do. It's a little bit of work, but we are trying to look beyond the right edge of the chart, and we are not trying to be, how would you say, crystal ball readers. Okay, I want to be clear about this. We're not looking into gazing into a crystal ball and saying, pontificating on what might happen. We're trying to be logical about it and employ some basic technical analysis, if you will, on these charts to decide and sort of predict in our own mind what markets might do. And then we think ahead, well, okay, if it did that, what are we going to do if it gets to where we're thinking? Time's almost up, 7 seconds left. Where might this market retrace to? And if it when it did it, what would you do when it got there? Two-part question. I see a lot of great answers coming in here. Time's almost up. Couple of seconds, yeah. Excuse me, left. If you're going to answer, better get something in there. Okay, I see some more numbers from Minaj, OJ, O, coming in. Jim B, squeaking under the wire here. Joseph. All right, good. Most of you, mid-band, Dave, chart not moving. Richard C, 48 to 60, looking for a long. We're talking about this area over here, BJ. Sorry if that wasn't clear. We're looking at this area here. We set off of this swing. Okay, we all put together, we put these lines on the chart. We have our mid-band, we have our line support and resistance lines, and the question was, oh, okay, how about now? Can you see it right now? Cursor moving? How about now? Cursor moving? I'm moving the cursor around the swing I was talking about. Okay, good. Most of you had some most excellent answers. I want to say that almost all of your answers fell in here. Now, I think every one of you said that you're buying to get long on a retracement anywhere down in this area right here. Perfect. Yeah, my apologies. I think it was frozen for a couple of seconds while I was trying to explain the question, maybe a minute or so. So my apologies. Everybody sees this now, right? Yeah, so that was the question. The question was, when we thrust up here to this swing, if and when it was to retrace, where might it pull back to? And all of you answered numbers. Perfect. I like this. Well, tell me you can put ranges in. Anywhere down in here, I'd be looking for a bounce. And I'd be taking a long trade. That was most of your answers. Perfect. That's exactly what you want to do. All right, now let's advance this chart in real time together. You tell me what you see, and when you decide you're going to pull the trigger to get in a trade, and everybody said long, so we're going to type in L. Okay, we're going to type in L when you're ready to get in, using the tools or however you choose to get in. Okay, ready? All right, here we go. Real time. Real time. Let's pretend we're doing this together. Market pulling back, taking out this little swing here a little bit. Remember, okay, I'm going to leave that little, kind of like a little pitching zone there, if you will, right? Trying to get a strike down the plate. All right, here I go. I'm going to advance it bar by bar. Dropping, dropping. Let me blow it up so it's clear. So make these bars just a little bit bigger. Hold on. There, hold on. Come on, get bars, get a little bigger. Everybody see the bars here as they're descending? I'm going to go bar by bar. Okay, it's coming right down here. Just hit 45, 41 on the swing of this little candle right here. Okay. Ooh, good. Good. Oh, wow. I'm really happily surprised and quite impressed, I must say. Right now, I saw a whole slew of L's come in. Wow. Okay, Minaj, Ken, Ray, Chris, everybody, Carl, good for you. Good for, all right. All right, let's continue to advance the chart. Stand by. All right. Anybody else? Okay, LLL's coming in all over the place now. All right. Okay. You can't get in now. You can't put the, you don't want to put the L in now, right? This would be the thing we were talking about, right? You know, before I just address that issue, let me circle back. Let's go back and recreate what happened here. We all agreed as a group and a team here tonight that after this market had thrust up just above this swing, we don't chase it up here to get long. We must patiently wait for a retracement. There are several different types of retracements. Retracements can come to the midband, they can go deeper beyond the midband, or they can be shallow just above the midband. It's healthy to think of retracements as an area or a range. So for instance, in the live room, we may say a number, or we may say a couple of numbers, simply because it's really a range, but in order for us to focus on a particular area to get in, we give a number because it's easier. You know, it's just the easiest thing to do. But the fact of the matter is, if you said, well, I'm going to get in somewhere, anywhere between basically around 45, 46, 48 in the 60 area, if it dips into this opportunity zone, if you will, I am looking to buy it. The trend is up, and I'm looking for a buy. So essentially what you've done is you've identified an opportunity zone where you're looking for a trade, and you know the type of trade you're taking, yes? Good. All right. So as the market starts to pull back in real time, let's recreate this very quickly. It's pulling down. It's pulling down. The bars are descending. This is the retracement we wanted, right? This is the retracement we wanted. Now, notice bar by bar what has happened to these bars right here, right in here. They are descending into what? What do we identify ahead of time? What do we already know ahead of time before it even happened? Right, it's coming right into our opportunity zone, isn't it? So when this occurs, we have this is the how would you say, a challenging part of trading is to be patient enough to wait for markets to come to you. Much too often, I talk to traders all the time about this, and what happens is sometimes they tend to be in a hurry or nervous, sometimes anxious, and they want to, just pull the trigger and get in these markets. And they want to just get in and participate, make money, all sorts of stuff. And so what happens is they tend to overlook and jump in maybe a little ahead of time or a little bit too late. So when you've thought ahead and you see a collection of interesting things here, we have an uptrend line, we got an established swing level here, we're coming down just below the mid-band uptrend line, we've identified our opportunity zone to get long. The bars are descending right into it. Now this is game time, okay? Trading is serious business. This is how you get an edge in the markets. It all comes down to an edge. If you think about it statistically for 1 second, if you're going to trade any kind of market, and you're going to enter that market with your real money and put your capital at risk. When you pull the trigger, if you didn't have any tools or any knowledge, or there was nothing on this chart except for blank bars, not even with color on them, what are your odds when you buy or sell the market? This is a blank chart with just bars on it, and you decide to buy somewhere or sell somewhere. What are your odds? That's an easy question. That's not a trick question, by the way. What are your odds? Good. What are your odds? What are your odds? Either way. What are your odds of doing anything? Anything that you do? Yeah, 50-50. 50-50. Now, can you make money with 50-50 odds? If you're good and you can manage trailing targets and stops, and so what is going to, you can in fact make money at 50-50. However, wouldn't it be much better to have an edge? So for instance, when people large banks, investment banks that run scripts and algorithms, how are they making money? How is anybody making money? You have to have an edge. An edge is something in the market that gives you something that are going to increase your odds above 50-50. So what is that? What is it? What's going to be your edge? Well, you have a lot of tools on here, right? You got support resistance levels, you got the bands, you know where the market's gone, you have a good sense of where it's going, and you know what you're going to do ahead of time. That can increase your odds from 50-50. Pattern recognition. Good, Joseph. Yeah. Now you're increasing your odds from 50-50 perhaps to 60 or 70% skewed in your favor. This is how you establish ways to get in every day and deal with these price patterns, recognize them, and make money. Price action. That makes sense, everybody? So when the market comes back down into your sweet spot, this is not the time to go pet the dog and get yourself a Coke and make a sandwich. This is another thing I want to say. I'm not going to spend too much time on it, but you really got to be focused. You've got to pick the correct instrument you like, learn it like the back of your hand, and then trade it, trade it, trade it. And when you're in there with your capital, even in sim, you got to treat sim like it's real money sometimes. A lot of people just blow off sim. Oh, it's sim. I'll just go, oh, I lost. Oh, whatever. Well, that's the tough thing is that when you trade in sim and you don't treat it like real money, when real money comes along, what happens? Yeah, it's a struggle. You start fighting, right? Anyway, so we're in the Super Bowl. You're standing up at the plate and the pitcher's throwing 90-mile-an-hour fastballs at you. You got to pay attention. So when the market comes down and these candles start to form right here, and I'm going to be really clear about this. This bar and that bar. I want everybody to memorize this pattern. I want everybody in here tonight to commit this pattern to memory, because it's this pattern right here that's going to help you so much in your trading, bar by bar. In this scenario that I have right here, A, B, C, I'll give you 10 seconds. Which one of the three is the reversal bar? A, B, C. 8 seconds left. Which one of these three bars is the reversal bar? A, B, C. 5 seconds left. It's a pretty simple question. It's a price pattern we're all going to come out of here and memorize tonight. We're going to know this like the back of our hands, so that when we see this 87 times next week and tomorrow 14 times, we're going to know what to do. Time's almost up. Two seconds. A, B, C. Good. Time's up. The answer is C. Because, let's be really clear when we say reversal bar. As this market is descending, and we're trying to get very detailed on our trade entries using our opportunity zone, our swing levels, and the uptrend that we're in, our trend line. Each one of these bars, for the most part, on the way down, all closed at or below the prior bars, correct? Right? However, when it came and bottomed out right within a few ticks of our opportunity zone, we get a reversal bar. This is your entry on this bar right here. That's your entry on that bar right there, long. And now you would put your protective initial stop down just below that swing level there. You can use Object Trader. It would do it for you. Because here again, I'll use all manner of Viper tools to get in, but you're long from here. That's why when I did this pattern, as I showed it pretending to be in real time, when that bar showed up, there was a whole slew, I'd say almost half or more of the people in here hit the long button right here, said I would be in. And that's what it is. So the critical takeaways here are put our swing levels in, draw some lines on your chart so you see them. Look beyond the right-hand side of the chart after a thrust move to determine whether you're in up or downtrend. Determine where you might get in, and then work really hard to memorize reversal patterns like this, because this is what's going to get you in. C is the reversal bar, Chris, because we're looking for longs and it closed above the prior bar. C, A, B, C. All right, we're almost out of time. I do want to cover a couple other things real quick, because markets are not always trending, and we need to decide how we're going to handle certain consolidation patterns. So let me quickly pull up another chart and look at this issue. I've covered this quite extensively in other webinars. I'll touch on it here. I will talk more about it on Saturday, because there are a lot of consolidation patterns that occur, right? And we need to know what we're going to do with them. And it really comes down to whether, and I'll ask this question, I ask it almost every webinar, how many of you in here tonight are comfortable scalping in a range? Scalping in a range. How many of you are comfortable scalping in a range? Anybody? I mean, this is the easy question. Do you like it or don't you? Ranges. Oh, interesting mix. We got a handful of nopes. We got a handful of yeses. A couple I like ranges. All right, here's just a quick comment on ranges. Scalping markets in ranges really varies from instrument to instrument that you trade. So you have to find an instrument that fits your trading personality, first thing. Second of all, it's a function of the time of day. If it's early in the morning where we got good volatility and good volume, you got enough movement to support trading a range, so the market's getting pushed around a lot. If you're in the middle of the day and it's low volume, low volatility, maybe you want to consider standing down on that. 10-second question here on NASDAQ. Looking at the right-hand side of the chart, what are the swing levels here? Looking for two numbers, 10 seconds. What are the swing levels on this chart? Looking from about this section right here over this way, this area right here, essentially the right hand half of the chart. Two numbers. Where are the swings? Seven seconds left. Doesn't take a lot of, I'm not asking for you to take a trade. That's not the question. I'm not saying, what is the trade here? Where are you getting in? Any of those kinds of things. It's a very simple question. Two numbers. Where are the swings here? Eyes focused right-hand side, right here, where I'm circling the cursor. 6 seconds left. Two numbers. Where's the swings? Not complicated, pretty straightforward. This is something you should do on your charts every single day. We're going to put lines there, right? We're going to put lines of support. We're going to put lines at resistance. Where would you put them? Good numbers coming in. Peter, Chris, Carl G, Dave H, Ray. Good. Dennis looks good. Walter, some good numbers there. Yeah, Chris, you saw the question, right? Yeah, where's the swings? All right, time's almost up. Two seconds. Squeak it in. Last couple answers. Ray, BJ, Ralph. All right, good. Time's up. All right, so here you can see that some levels were hit. Most of you came in and you had numbers between 14 and 24 and 27. Let's just look at a couple of swing levels that we see just by use of our eyes only, just sort of visualizing it. On the top end, I see a swing that was here. I see a swing that was here, right? And I see another swing over here, kind of in between the two, more or less, right in here around 27-ish. Now, here's where I want to help you as you visualize this on your charts, okay? I think I said this earlier several times. Swing levels are not perfect and exact. They're not an actual real just perfect number per se. It's healthy to think of them as kind of an area. And so when you visualize support and resistance and swings as areas, you're going to realize that there's going to be a small area above your swing and a small area below your swing that could act as support and resistance. For instance, this was a little bit above it, this is a little bit below it, and this is right kind of in the middle. So I think we all would agree that you got resistance up in this area here, yes? Now I see a couple of different areas also on the support side. So if you put, let me show you a couple of swings that I like that you could have put as numbers. I see one here. I see one here, right on here, and I see one right in here. So from a support perspective, this one is actually pretty close to that one. I see two levels of support, one just slightly under the midman and another one down at that other swing down here around 14. So you got one down here. And you could make the case you have one sort of right in there. Now here is the important takeaway from what I just did. In addition to that reversal pattern, here's an important thing, and I didn't necessarily intentionally save it for last, but this is going to be one of the few last things I'm going to say here. If you put these lines on your chart at any time of day, it doesn't matter, and it remains within these lines, what do you have? In other words, the price action stays within the confines of these lines. What do you have on your hands? For whatever instrument you're trading, you put lines on your charts, and the price action from that point forward remains inside the confines of the lines that you put in. What do you have in front of you? This is how simple this can be. It really doesn't have to be complicated. I'm trying to keep it as simple and straightforward as possible. You're in a range. Yes, exactly. Good. You are range bound. Support and resistance levels. You're consolidating in a range. Yes, exactly. You're channeling sideways. So now you have to decide if you're going to trade it. What are the criteria to use to decide if you're going to trade a range that you see support and resistance levels? What are the criteria for you to decide to get in to trade it? I know most of you are going to know this right off the top of your heads. Some of you are new and visiting, so you might not know this, and you're excused. Because if you're just visiting, of course, you're not going to know a lot of this stuff. Right, the minimum size has to be what? 20 to 25 ticks. Good, 20 to 25 ticks or more with some clean tops and bottoms. Good, Carl. Is this range tradable? Yes or no then, based on that criteria? Remember, NASDAQ's 4 ticks a point, right? Look at the numbers. You should be able to quickly, within seconds. Is this tradable? Yes or no? Got the lines? We know our criteria? Yes, of course. This is a huge range. You know, if you said anywhere from, say, between 14 and 18, 16 support, up here to 27, 10 times 4 is 40. This is a 40-tick range. Plenty of room in here to take some trades, yes? So let's watch what happens here after this thing advances, and then we got to wrap, okay? Come up, we hit our head, pull back. Where do we come to? Where do we come to? Right down to support, don't we? Come back up, back down to support, back up, down to support, and then we break, we fall down off the map. So you were essentially in this range from, you know, shortly after 7 o'clock all the way to almost 7:30, you know, deciding if, how, and if you were going to trade that, right? It stayed in that range for a half an hour. So here's the thing, final thing I'll say about trading ranges and scalping ranges. It really is a skill set we all should work on if we haven't tried to learn it. Try to make at least an attempt to try to learn it, to experiment with different instruments, see if you can figure out how to trade those ranges, because sometimes you can get stuck in a range for an hour, half an hour, 30, 40, 45 minutes, and you just be sitting there staring at it when you could be making money inside those ranges, right? Just remember the criteria. Put your lines on your charts. It has to be big enough to get some movement to scalp. All right, listen, I'll pick up again there on Saturday from where we left